So I'm just going to do an extension on this question. Now it didn't ask me for the post-closing trial balance, but that's exactly what I'm going to do, just to show you how this original trial balance changed once I went through and did those closing entries. So I'll just put my debit and my credit here. So my accounts receivable is a permanent account. So I never ended up closing that balance out. So I'm just going to move that balance here. And the same thing with your accumulated depreciation. That's a permanent account. Cash is also a permanent account. Just because we wake up the next day doesn't mean that there's no cash balance in your bank account. So that will stay the same. Now, depreciation expense is one that we closed out, so that will be 0. The equipment is a permanent account, so that will stay on our balance sheet. Our interest income was a temporary account, so that will be 0. The rent expense and the salaries expense are both temporary accounts, so those were brought down to 0. Subscriptions revenue was a temporary account, which we brought to 0. Our capital account, we just calculated the new one, so it's the accumulated capital plus the revenue minus the expenses minus the withdrawals, and it's this number right here, the 17,900. So I'll just bring that here. Now my withdrawals were a temporary account, so that's 0. And my unearned subscription revenue, remember that's a liability, so that balance doesn't change either. So that's 19400. So I'm just going to re-add up my debits and credits, and hopefully they balance. So if I take 21,400 plus 8,900 plus 19,400, that gives me 49,700. And if I take my 12,400 plus my 17,900 plus my 19,400, that gives me the same. So that's perfect. So it balances. So now this is the trial balance that we move into the next year with. And remember, a fiscal year is 365 days.